All right, welcome to today's session. Right, so remember, this is introduction to price action, and this is kind of like the basis of what happens on the market. And this today starts your journey and your foundation into what I basically do. You understand? So this is called price action. So I'm going to talk about price action, right? And it's going to be a very interesting class because we have a lot to learn. Right. So first of all, what is price action? Because there are different concepts out there. We have price action, we have smart money concept, we have ICT concept. Now, these three concepts or strategy, right, are what people use. But me myself, I'm a price action based trader, and I've been doing this thing for years. You understand? And price action is kind of like the foundation of everything you see out there, even on YouTube, on X, and so on and so forth. So, what is price action? Price action is just using the past to predict the present and the future. Now, let's say for instance, now markets got up to this zone, right? This is price action in play. Markets moved up, and when it moved up, it sold down, right? Take note. Once it's sold down, right? What are you to do is to mark up this zone. Mark up this zone so that if market comes to this zone again, what should you expect? You should expect a push up to this zone and a sell down backward. I hope that's clear. So price action, you are trying to like use what has happened in the past to predict what will happen in the future, right? So let me give another scenario again. So let's say for instance now the market came to this zone and bought, like it went up. So if market should come to this zone again, what do you think would do? Will it buy or will it sell? It's going to what? It's going to buy based on what? Price action. Market will always respect those zones it has respected in the past before, right? So aside from those zones that market respect in the past before, market will always repeat patterns, chart pattern that are always done before. So let's say for instance now the market formed something like an M before, like last week. You are bound or allowed to see the possibility of another M pattern again in the nearest future. It can be next week, right? I'm going to show you guys a trade I took on the mentorship group, and it was due to price action, a similar pattern that market has done before and is now in play again. So this is a clear example of market repeating those patterns again. So you have to be vigilant on the market to observe those patterns, because whether you like it or not, market will not do anything new. It is something that you must have seen over and over and over and over and over again. So don't expect anything new or much from the market. So let's say for instance now the market is something like a W pattern, right? It's something like a W pattern 2 weeks ago, right? Expect something like a W in the coming weeks. Let's say market does like a P pattern, for instance. It forms something like a P. Expect what? A P pattern in the coming future. You understand? So all these patterns, right, they tend to repeat themselves. This is price action. Markets tend to repeat all those patterns that you see, right? And aside from those patterns, those zones, you have to be careful and observe those zones that market has respected in the past before, because whether you like it or not, markets will always repeat or respect those zones it has respected in the past before. You understand? So moving on to what we have, right? So to really understand price action, you need to study what happened in the past, then observe what's happening in the present, and then predict where the markets will go next. You understand? So we as traders, we are only forecasters, right? Just like the weatherman, they forecast the weather. Understand? We try to forecast where to buy, when to buy, where to sell, when to sell. You understand? So this is how market actually works, right? So when traders make trading decision based on repeated price pattern that must form, they indicate to the trader what direction the market is most likely to move. price action involves using tools like chart pattern that I just explained right here. It involves using candlestick, which we will dive into. It involves using trend line. It involves using market swing structure like upswing and downswing. It involves using what we call support and resistance level. It involves what we use Fibonacci, what we call Fibonacci retracement levels, right? Generally, price action tends to ignore the fundamental analysis, right, and tend to combine these tools I just mentioned to achieve a greater result. Now, without wasting much time, let's look at the charts. Let's look at the real life chart to see if this I'm saying actually conform on the market, right? So let's go and look at a chart, right? Let's look at some charts of some few days or some few months ago, right? So let's see what actually happened. Right now, take note of this price action right here. So let me zoom in a bit, right? So let's look at this right here. So you look at this zone right here, market came to this zone and bought, right? So this zone, I have to mark this zone. Market came to this zone. You can see, what did it do? It came here and what? It rose up. You can see it came to this zone and rose up, right? And now if market should come to this zone again, what do you expect? You should see what? Rose up again. Now, there's something we call confirmation as a trader. You don't just blindly trade because you feel that, okay, market gets to your key area or your key zone, it should buy once. You have to wait for confirmation. You have to investigate at that your key zone if there's a bullish presence or a bearish presence around that zone. Now let me use a candlestick example to explain what I mean. Now listen carefully, right? So let me zoom in carefully and see and show you what I mean. Now you can see that this is obviously a key area because market has tested this area before at price 1.33585. And when market got to price 1.33585, what did it do? It bounced off. So if you want to take a trade, right, off this zone, right, what do? You wait for market to come to that zone, and this is where candlestick analogy or interpretation comes in. Now you have to investigate whether there's a bullish presence or a bearish presence around this zone. So you can see that we have a lot of bullish presence around this zone. Remember, this is my own representation of my bullish candlestick. Now remember, we told you guys that we have two participants in the market. Either the market is buying or the market is selling. Either we have a bullish market or a bearish market, and we mostly have either the buying candlestick or the selling candlestick, right? So in your MT5, you will see something like green as your bullish candlestick and your red is your bearish candlestick. But for me personally, I decided to change my own color to this. So my bullish candlestick are the blue ones, while my bearish candlestick are the black ones. Take note. Now, what am I saying in essence? What I'm saying is that if I want to buy, right, I look at how the candlestick, which is the bullish candlestick, will react as my key zone. And obviously, look at how the bullish candlestick is forming. Now, I'm going to be giving you guys a complete guide or a complete ebook to understand the candlestick proper, but we'll go into that later. So this is a very clear example of price respecting the zone it had respected in the past before and coming to respect that zone again. Now look at another one not far from us, right? This is still on GBP USD. This is a zone right here. Now you gladly see that when market came to this zone, what did it do? It sold. So what should you expect if market sold? What should you expect? You should know that if market gets to this zone again, you should what? Sell. You can see that after market tap into this key area, what did it do? Price action, it sold, right? And now you need to observe patterns. That's why you have to study the market, be on the chart for a longer period of time to be able to understand what is going on in the market. That's why I recommend you have the TradingView platform on your phone or your tablet or your laptop, whatever platform you are using. Right? Have the TradingView platform because it will give you more tools to actually trade with. You understand? Take note, right? So let's look at another example. on GBP USD, and let's see how price moved around this price action, right? So now this is another one again right here. Let's look at this carefully. You can see that this is obviously a key area, because when markets actually tap into this zone, what did it do? It's bought. So if market should come to this zone again, what should you expect? You should expect a buy also. You understand? You should expect a buy also. So market should buy all the way up. Imagine you caught this trade. This is almost more than 200 pips caught on GPS, because this is the H4 time frame. This is a massive buy. So whatever market has done before, it will respect those zones again. Now the big question is, will market respect all zones? That should be the question you should be asking now. Will market respect all zones? Majority, yes, and sometimes it may not respect all the zones you look at, right? It may not respect the zone you look at. So let's take, for instance, I spotted one right here, right? Let's look at this one right here. This is another zone right here. Let's not make the charts messy. I believe we all are having a very clear example of what I'm saying. Now look at it closely on this chart right here. Let me zoom in. Now you can see that when markets actually tap into this zone, right, you can see there was a massive buy. Now when market came to this zone again, what did it do? It failed. It just gave a breakout, then pushed up again and started what? Selling. You understand? You are not wrong trying to catch a buy at this zone. You are not wrong. But based on some market scenarios where we find ourselves in, maybe there was an economical event that happened that can sponsor this sell. So you're looking for buy at this zone, yeah, my dear, you are actually right. But that's market for you. Market is not aligned to respect all the zones you see. You understand? It not respect all the zones you see. There are some zones that get invalidated, and news events can actually do that. Can actually invalidate those zones that you have marked for a buy or a sell. Now let's look at another pair, and let's see for ourselves, does this happen on only GBP USD or it happen on all other pairs? Now let's look at another pair, right? Let's look at Bitcoin, for instance, BTC USD. Remember, we can trade the crypto market, even the forex market. You can trade the crypto asset. Now let's look at Bitcoin, and one thing that TradingView gives you, you can look at data of 1 year ago, 2 years ago data. You understand? You can look at data of far back. That is why you should have TradingView on your phone or your gadget, right? So let's look at another example right here of price actually respecting those areas. Remember, we're looking at the past to actually predict what will happen in the future. So you have to look at past data. As a price action trader, you have to look at past data to be able to know what to expect in the coming days or in the coming future, right? So let's look at this now. This is on GBP USD, and this is on Bitcoin, and this was a key area I marked right here. And you can see that when market tap into this zone, what did it do? It's bought, right? So if market should come here again, you should expect what? A buy also. You can see that when market tap into this zone, it's bought. You understand? So they're looking at the past. This was a past data, right? A past zone that the market respected before, and now it's coming to respect that zone again. So you can see that market actually rose all the way up on Bitcoin. Nice buy on Bitcoin, though it was a bit choppy because of the price action, but this is a very clear example of what we mean by using the past data or the past zones. So we're using past data to be able to predict what will happen in the future and actually repeat themselves. So let's go back to some months data, let's go to some month data. Now take note, right? You can see that there was a W formation right here, a W formation right here that actually caused this buy. Take note, like I said before, market can form different shape. It can form a W, it can form an M, it can form a P, it can form anything it wants to form, but you have to go to pinpoint that later on, because whatever it does this week, it will still do it again. You understand? Market does not actually do something new. Price action traders, market does not do anything new. It only tends to repeat what it has done before. So take note of this W right here, right? And let's look at this W happening again. Now we had this W right here, and if you look at it closely, this buy that we caught, or this buy right here on Bitcoin, is forming a W also. It's forming a W also. It's forming a W just like the one right here. It's forming it right here again. So imagine you caught this trade, right? This is a massive buy on BTC USD, right? This is a massive buy. I think it did over 500 pips on Bitcoin. So this was, if you can use this past data, you can be able to like predict this buy that happened on Bitcoin, right? So first of all, market actually respected a key zone, which is this one right here. It respected it, so I mark it down. Then I know that if market should come here again to this zone, what should happen? It should buy again. So that's why I had to adjust it and ensure that once market tap into my zone, I should expect buy. So as a day trader or as a swing trader, right, you can easily catch this buy right here, right? Imagine you caught this trade, put your SL beneath the zone, right? And this is a 1:3 trade, right? So let's look for more price action data, right? Because we're using the past actually to predict what will happen in the future, right? Very, very important. Very, very important. Let's look at this one right here, right? We'll look at a buy scenario. Let's look at a sell scenario. Now, look at something right here. You can see that when market pushed to this zone, what did it do? It sold. So if market should come here again, expect a reaction to this zone. So that's why any turning point you have in the market, you should always mark out that zone, because if market should come to that zone again, expect a sell or a buy. So any turning point, you have to pay attention. That's the box you are seeing. That's all these box you are seeing right here. They were turning points in the market. The market actually reversed from a sell to a buy, or from a buy to a sell. So all these zones right here, I have to pinpoint them and mark it out, so that if market should come back to this zone again, I should be looking for it was a sell. As simple as that, right? You should be able to pinpoint all those zones, all those turning points. I believe this was my first foundation in trading, and when I started that time, I started using all this data to be able to predict what will happen in the future. And trust me, it's going to help you along the way. You can see that when market even came to this zone again, what did it do? You can see that it still sold. It came down. It gets something like a W or an M, and what? Still sold again. Now we are gradually going somewhere. Now let's look at another data again and see what market actually did right in the future. Now this is a zone right here that market actually turned from. You can see the market sold. This was the turning point that market actually sold from. So in the future to come, we have to mark this zone. We have to what? Mark this zone. We have to mark this zone. You can see that when market actually eventually went to that zone, what happened? It sold massively. So this is how market actually move, and this is how price actually move. In case you are looking at your chart and you got confused, what actually caused this massive dump or massive pump on Bitcoin or any pair you find out, right? This is what actually happens technically behind the scene of how traders make money every day from those price action. Now let me show you guys a very vivid example of a trade I caught out in the mentorship group. I shared that trade that should be 2 weeks ago on USD CHF, right? Now this is my entry. I will show us my entry and how I caught the trade. It's simple. I will explain it to them how I caught the trade. Now it's simple. You can see this buy right here. This was a 1:3 trade. This was the buy I caught right here on USD CHF 2 weeks ago, and this was how I caught the trade, right? Aside from my technical prowess in catching this trade, I also noticed that there was a repeated pattern that has happened before, which is what? This W right here. You can see the W right here, and now we had the W forming again right here again. So you can see that these patterns, they don't change, they always form what they formed before. You understand? There's nothing new that's happening, that happened before. So you can see clearly that there was a W formation that sponsored this buy before. This was I think this happened some months back. That was April last month, right? And now May May 13th, right? We are seeing market actually doing that same pattern again and again. And in the nearest future to come, let's say like next week or 2 weeks from now, we will still see this pattern again. You understand? I did not just decide to take this trade based on, okay, I'm a good trader. No, I took the trade based on, I noticed that there was a repeated pattern. So anything I'm showing you guys, right, is going to help you later on, right? Anything that you are learning right now in this beginners class, sorry, in this beginners phase, right, you are going to need them in the future to come when you start taking your trade, right? Because they're going to help you to actually do well, right? These repeated patterns, price action, right? Price action is king in the market. And so let's look at another area again that markets actually reverse from, courtesy of markets respecting the past zone. Now look at this zone right here. Look at this zone right here. Right, look at this zone right here. Now if you look closely, right, you'll see that there was a strong level that caused this buy. There was a strong level that caused this buy. You can see that market came here, and what did it do? It pushed up. So if market should come here again, what should you expect? So each turning point, you have to mark them. You should expect what that same reaction of a buy that you had before. You should expect that same reaction again, and that's what happened or had right here that caused USD CHF to actually buy to the upside, right? So this is a very clear example of what we mean by price action, using past data to predict what will happen in the future, right? And use that as your, not as your basis, right, but as part of your confluence or your confirmation before you place any trade, right? So let's look at few more examples before we call it a wrap and we ask questions and we go again tomorrow. We wrap up for today. So let's look at more example, right? There's going to be a note concerning this that you guys have to follow on, that I'm going to share with you guys after this class, right? So take note, right? Take note. Now this is another example again. Now look closely. When market came to this zone, what did it do? It sold, right? It sold, right? So if market should come to that zone again, what should you expect? So what I will do is quickly mark this zone. I'll quickly mark it so that if market should come here again, what should I do? I should wait patiently for a sell, because whether I like it or not, the banks also participate in trading, and these areas too, they also look at these areas that I'm also showing you guys. They look at these areas too to want to take their trading orders from. You understand? So if it's sold right here, we should expect a reaction to this zone right here, and market should sell. You can see the beautiful sell. Whatever has happened before to happen again, right? And I don't need to even show you guys more. Looking at my screen right now, you can actually see more for yourself that this actually works, right? So let's look at this one right here. You can see this example right here, right? When market actually came to this zone, what did it do? It bought. Now if you come here again, what should happen? It should buy. So for those starting out in price action, right, these are the foundation of what you should know as a price action trader. These are the foundation. These are the little things that you ought to know as a price action trader, right? So what I have to do is simple, is to mark out these zones, mark them out, right? Mark them out. I will have to mark them out so that If price gets here, I will look for buy opportunity. As simple as that. Now remember I said that it's possible that market can break this zone. You understand? Because after market has tested a particular zone for a lot of times, let's say 3 to 4 times, right, expect a breakout of that zone. And that's what we had right here. You can see that this zone was actually marked out, right? It was actually marked out, right? We had the first touch, second touch right here. Let me explain it. Market came here, bought, came here again, bought, right? Came here again. What did it do? Bought. Then when it came here, what did it do? It broke it. So you can see that this market, right, after it has tested a particular zone for a lot of times, right, expect a breakout of that zone, right? Because that zone obviously has been tested a lot of times, right? So it can no longer hold again. Take for instance as a let's say you're trying to like carry something, for instance, or a foundation of a house, right? So when there's too much weight, or let's say the construction was wrong and the upper part of the building had too much weight that the foundation could not hold, right? Definitely the foundation will collapse, or the house will collapse. If the foundation is not strong, definitely the house will collapse. So this is just like an example right here. If the foundation, which is this below right here, if it's not strong, right, it's going to what? Collapse. The price is going to what? Collapse. And we've seen this thing happen a lot of times, right? This is not a new thing. We've seen this thing happen couple of times. So we are not strangers to what market actually does like this, right? So let's look at a few more examples, right, to see for ourselves if market actually respect or conform to what I am saying, right? So let's look at a new pair entirely. Let's look at a new pair, right? Let's see NZD. I believe you all can hear me loud and clear and can see my screen, right? So let's look at NZD, right? So looking at NZD, right, I think I gave an example some days back, right? So look closely. So this was a vivid example. It's very clear to what market wants to do. So first of all, when markets came to this zone, what happened? It bought. So which means that this zone that it actually bought from, we have to take note of that zone. You understand? So that if market should come to this zone again, we should expect what? A push up. And that's what happened right here. When market came to this zone, what happened? It's rallied all the way up right here, right? So let's look at another example again, right? And this is it right here. We had this down movement right here, then market pushed up. Now this zone right here was not neglected because it's acting as a strong zone. So if market should tap into this zone again, what should you expect? You should expect what? A buy. And if you look at it closely, we are having what we call a W pattern. Remember, I said this pattern will repeat itself over and over again. This is for NZUSD, right? So let's look at if we had this W pattern again. It's taking that shape of a W. And look at if we had a W pattern that has played out before, that we can use as a reference point to that W, right? Now let's look for a similar example. If you can get that W, right? And yeah, we had that W, right? That caused a massive buy. Now if you look at it closely, right, this was kind of like forming that W again, similar to that one we had right here, although that one was a bit wider, but this one is a bit narrow. So it's kind of like the same, printing out the same structure or the same pattern that we want to see, and that actually triggered this buy. Now take note, this is the first class, so there are more to learn, you understand? And don't use this basis or today's class as a basis for buying or selling. There are other reasons why you should buy, right? The candlestick is one big factor that most traders out there tend to ignore. But if you're able to interpret what the candlestick are saying, trust me, right, you become a very good price action trader.